Welcome to the first episode of Beyond the Balance Sheet. I'm Katie Collin, and this podcast is about going beyond the numbers to give GPs and other medical professionals the support and help they need with those financial decisions. After all, financial decisions aren't just about numbers, they're life decisions. Over the years, I've had countless conversations with clients about the difficulty and challenge they've had in terms of unpacking the complexity of being a medical professional and the financial complications that come with it. And that's exactly why I've started this podcast, to be able to break it all down into clear, concise, practical advice that you can use on a day-to-day basis. We also have a great lineup of guests who are specialists in their areas, who know all about the key topics, whether it be pensions, whether it be incorporation or primary care networks. And they're going to impart their wisdom and experience to be able to give you the tools that you need to deal with those core issues. We'll also be running a series of webinars for those particular areas that may be more complex and to give you a bit more of an interactive experience where you can ask questions and get some answers as well. So watch out for our webinar series where you can take part as well. So today we're going to be talking about the national insurance increase that starts for 25-26. So for those of you who may not be aware, national insurance rates have increased from April 2025 onwards. That's the employer's national insurance rates that all employers have to pay on their staff salaries. Why is this such a big issue? Who's it affecting? What are the key consequences? So for every GP practice, they employ a series of different staff members, and that can range from admin assistants, reception, management, all the way through to clinical staff, so nursing, HCAs, salary GPs. Anyone who's employed and on payroll will therefore be affected by this increase. Now, it's not the employees themselves that have this problem, but the employers are now going to have to be paying an additional cost on top of those staff costs that they're already paying. So this was announced in the budget in October. Rachel Reeves stood up and announced two things. The first is that the rate that we pay at from April will increase. So that's gone up from 13.8% to 15%. And secondly, the threshold that we start paying that employer's national insurance has changed as well. And this is the really crucial element. So a lot of people focus on the fact that we've gone up from 13.8% to 15%. It's only 1.2%. Could that be manageable? Yes or no? But the other really important factor here is actually that the rate that we start paying tax at has changed, and that has reduced. This is really crucial for practices in primary care because a lot of their staff may be very close to that threshold. I'll explain a little bit more now. So originally, we used to start paying employers' national insurance at around about £9,000 on a salary. So anything below that would have been free from employers' national insurance. That rate has dropped quite dramatically to now £5,000. So for every single employee, you've now got £4,000 worth of salary that you're paying 15% of taxes in that you weren't paying before. For GP practices, this is a massive headache for two reasons. The first is the majority of their staff are probably on a band of around about between £25,000 and £50,000. So if you think about the percentage cost that's gone up by, that's astronomical. That's a huge amount of money already just going from March to April that you're suddenly incurring. The second factor is, unlike most other organisations, staff costs take up the majority of the costs in a GP practice. And this is a fact that's not really very well known, that in fact, 60% of core income that comes into a GP practice is spent on staff costs. And that's rising currently. So if you imagine now that we're increasing the rate that we're paying at and the threshold we're paying at, for most practices, that jump becomes unmanageable. Now, what we see in the private sector when this is an issue, because of course it affects other people as well, there's been some compensation that Rachel Reeves has put in place. So she has said that for anyone who gets the employment allowance, which is an amount that comes back into the employer, that amount has been increased. So if you're a private business, you get £5,000 a year coming back into you to cover some of your national insurance. That's now gone up to £10,000. But here's the real kicker for GP practices. You don't get the employment allowance because technically you are part of the NHS family and you're a public body, and therefore you're not entitled to such tax break. Now, you may think, well, hold on, that seems fair. You're a public body. You shouldn't be entitled to any kind of allowance. But when we look at other public bodies, their national insurance increase is being funded for them. But what we find with GPs is that national insurance increase hasn't been funded at all. So the GP practices have been stung not only with the reduction in the threshold, not only with the rates going up, but also they don't get that increase in the employment allowance. So overall, this is becoming a significant issue. Now, we've worked out, Ramsay Brown, that the average GP practice will be spending at least £30,000, if not more, £30,000 more just on national insurance alone. That rate is the equivalent of a whole nother person working full-time in a GP practice. So when we wonder, why is access such an issue? Why can't we get an appointment? All those sorts of issues that patients face, now we see that actually the majority of those costs are going on national insurance for a GP practice. So now we've established that national insurance is going up, what that really means for a GP practice in terms of basic cost. What does that actually mean of where we are in terms of practice and financial planning? Now, the ramifications of this are significant. Firstly, if we look at actually what's happening in the practice itself, suddenly we're going to have to fund an extra £30,000 to £40,000 of costs that we weren't having before. Now, as I said, that's effectively the equivalent of a whole employee. But it also means that now GP partners are having to make really tough decisions about where they're spending their money. It may well be that someone resigns or someone retires and we don't replace that staff member. It may well be that we look to cut costs in other ways and streamline, so maybe some of our admin expenses. The real challenge for GP practices that we find is there aren't a lot of other areas that you can cut costs. If you think that 60% or over 60% of your income is staff, really that doesn't leave a lot in other areas. So we might have some administrative costs that might be around about 10%. Their financial costs in terms of professional support is really only about 1%, doesn't need a lot of leeway in other areas for them to make decisions. So GP practices are now having to look proactively at really how they're going to manage this burden. Now, thankfully, we have seen there has been some uplift to the global sum, which is good news. It means there's more pound per patient coming into practices. So potentially there is some breathing room there. But ultimately, we know that GPs are going to have to work a lot harder for that pound per patient. And really the key issue is that pound per patient is still based on this weighted system. Now, you might ask, what is a weighted system? What does that mean? Well, for a long time, we've been using something called the Carr-Hill formula. Now, the Carr-Hill formula looks at the patient profile in a GP practice and attributes a weighting to those patients. If I give you an example, it will look at whether the patient is male or female and potential life expectancy. It will look at the rurality of the practice. It will look at the age of the patient. It will look at the affluence of the area. All these different factors, and it will effectively say, okay, this patient might be young, fit, healthy, we'll give them a lower weighting. What that really means for GP practices is for younger patients, maybe in a more affluent area, they're being paid less per patient than another GP practice. And the theory is because that patient is less work. Of course, we all know in reality that doesn't always lend itself that way. Now, this Carr-Hill formula has been in operation for a long time and effectively dictates how all GP practices are paid. But the problem is we can't always model our staffing in that way because we have a certain amount of footfall, we have a certain number of patients, we have a certain number of targets. So we have this imbalance between how money is coming in and how money is being spent. And that's really the crux of what's happening down in primary care, is that conflict between those two things. So GP practices are now under a lot of difficulty trying to understand how do they make those two things marry up. So what does the national insurance increase mean for the actual staff in the GP practice? Well, firstly, you may have seen about this in the news that staff in practices generally are under a lot of pressure in terms of their salary. They're being squeezed by the terms of cost of living and mortgage rates going up. But of course, the inflationary increases that have been awarded in terms of pay rises are minimal. We've only seen in the last year, really, a 6% pay rise being awarded to staff. That 6% isn't a real 6% because the way that it's paid is based on the weighting of the population. It's also paid down to GP practices on the assumption that they only pay 40% on staff costs rather than 60% of staff costs. So for staff, this suddenly puts them in a very difficult position because they see all these big announcements saying a 6% pay rise, and the GP practices, the partners, know that that's not a true 6% pay rise. So immediately it becomes this clash between the partners in the practice and the staff. And that's partly just miscommunication where we see these big headlines in the news and we don't really understand what they mean. So the other pressure for the staff definitely becomes in terms of their pay and not being able to maybe meet their costs that they have personally or not being able to achieve what they want. We've spotted a large number of staff now maybe dropping down to working part-time and subsidising part of their salary by going privately. We've also seen a lot of people increasing their rates, so particularly locums looking at increasing their rates, or salaried GPs asking for more pounds per session to try and meet their cost of living needs. So the national insurance increase puts a huge squeeze on that relationship between employer and employee as well. So that's a big issue that we're spotting in GP practices as well. What does it mean for the partners? Well, for those of you who are a partner, I'm sure you're probably more than aware, but really the way that GP practices run is by the GP partners keeping their money and their earnings in the GP practice. So this is where you have your current account, which is your working capital that you retain in the practice. Now, unlike maybe other businesses where you've got investments, you don't need to do that. But of course, in these small owner manager businesses, that's what has to happen. So the actual partners are keeping their money in the practice to keep it afloat. We've got other cost pressures going on at the moment, inflationary increases. I've talked about interest rates. The economy is in a very volatile position at the moment. But now the pressure on cash flow is becoming bigger. Why is that? Two reasons. The first, of course, is if national insurance goes up, the monthly salaries that are going out of the bank are much more expensive and much higher. So there's a cash flow pressure there. But two, the way that practices are being paid is much slower and much more based on achievement. So what we're starting to notice is rather than monthly income being boosted, we're now finding that there are these quarterly payments or payments based on achievement or payments that need reconciliation before they come into GP practices. What's the knock-on impact for those partners? Well, the money that they have to keep in the practice is much higher than it ever was before. Before, maybe working capital would be 1 or 2 months worth of staff salaries, and that should be enough. Now we're finding that practices have to keep money in for pension contributions. They're going to have to keep money in for the increased salaries. They're having to keep money in because they're not being paid on time for some of the achievements that they're making. So for partners, they're under a lot of pressure now to be able to manage that cash flow in the practice. Where does Ramsay Brown fit in? So at Ramsay Brown, we act for over 300 practices across the country. We're really well versed in some of these issues that GP partners face and that GP practices face. The first key point is some strategic planning, knowing that these issues are going to happen and planning ahead. Far too often we've seen that the announcements that happen in primary care are last minute. We get a national insurance increase announced in October. We don't get the new contract information until March. So for 6 months, GP practices have had no idea how much they're going to be paid, but they know they're going to have an extra £30,000 worth of cost. This is huge, and we don't see this in any other sector. So it's very difficult for practices to plan. And that's really where we fit in. So I do a lot of work with my GP practices saying, okay, what do we know that you need to earn? What do we know that's definitely coming in? Where are your costs going to be? And we make a plan. The way you do that is 1, having really good accountants, but 2, having really good financial information. And that's where things like Xero and having up-to-date records are really, really important. I'm also advising a lot of GPs now to start doing things like quarterly management accounts and to be a bit more entrepreneurial and business-like with their practice. So having good financial information and being able to extract that financial information and make plans based on it has been more important now than ever before. So what else can you do about this issue? Well, a key thing that we look at Ramsay Brown and that I work with in a lot of my practices is forecasting. Forecasting a best case scenario and a worst case scenario and looking at the stress points in between. Now, we use zero budgeting as a really powerful tool. We have management accounts that we've mapped out, but we also use those best and worst case scenarios in terms of budgeting. That allows you to set yourself a target, say, this is what I'm going to spend this year. This is the resource that I think I need. If we find there's a worst case scenario, we'll budget accordingly in this model. It allows you to look at where you actually stand and flex your needs accordingly. We also find by creating those sort of forecasting models that actually you've got a target to work to. That makes you more proactive rather than reactive. And that's really the big issue that we find in primary care is everything that's announced to you is so reactive. We get GPRs increases that are announced a day before they take place. We get inflationary increases that are backdated for 4 months. So you're being given a scenario in which you're constantly having to be reactive. And what we try to do at Ramsay Brown is really empower GP partners and empower our clients to be able to take control of those scenarios and use them for their benefit and be able to plan accordingly rather than being dictated to and having to constantly look for where the money pots are. National insurance is also a big issue for personal service companies. What we're finding is a lot of people have set up a private limited company. They may be doing management, they may be doing administration, or even some clinical sessions through that limited company. Now, that vehicle could work really well, particularly if you've got a spouse or a child who's doing some work for you. Maybe that's taking minutes, maybe managing your diary, all sorts of different things they could be doing. Now, originally, you could pay someone £6,000 to do that work for you. They would be below the national insurance threshold, so no cost to the company, but also that person wouldn't need to be on payroll because their salary is below that threshold. Now, of course, everything has changed. Because the national insurance threshold has now started from £5,000, if you're paying that person £6,000 a year, they're automatically now going to need to be on payroll and you're going to have to start paying national insurance on that salary. So you're going to have to pay the cost for a software to run them on payroll. You have the responsibility of employing them and offering them a pension. You're also then going to have to pay that national insurance. So a lot of things to think about. Now you may decide, actually, is this structure worth it for me? You may decide to go with a good software solution like Xero, who have payroll automatically built into their subscriptions. You may decide to engage a specialist accountant to help you and give you some advice, and that's certainly what we're doing at Ramsay Brown. But the really important thing is you don't do nothing, because if you are paying someone that threshold or more, this is going to affect you. What does the national insurance increase mean for GP practices? Well, you may have seen a lot about this in the news. We were hopeful that national insurance would be covered in the new contracts. And actually, the House of Lords voted for it to be covered. Unfortunately, the House of Commons rejected that, and it is not the case. Now, the national insurance increase actually equates to about £30,000 or so for the average GP practice, which, if we boil that down into pound per patient terms, works out as roughly £3 a patient. There's been a lot in the news about how there's been a big investment in primary care. We've talked about 889 million going into primary care. We've talked a lot about the global sum increase. But on average, practices are getting roughly about £13 a patient in terms of increased income flowing into their GP practice. If we think about £3 a patient as a starting point has already been knocked off from national insurance, that's a massive amount that's going into primary care that's actually funneling straight back out into tax. That doesn't include anything else. It doesn't include increase in staff. It doesn't include investment in tech. It doesn't include ability to give access to patients. And so that's the real dilemma with the national insurance increase for GP practices, is it's not actually resulting in patient outcomes. It's just resulting in more cost. Today, we've unpacked a major tax policy change that might seem insignificant, but actually the employer's national insurance over time can reshape the way that your GP practice runs. But don't worry, you're not alone, and there's support there to help you manage this change. Next time, we'll be talking about practice incorporation. something every GP practice may be considering at the moment, particularly with issues around tax and liability. I'll be joined by my colleague Justin Cumberledge from Hempsons, so make sure you catch us then. If this episode gave you something to think about, please subscribe and stay updated. Also, watch out for our live webinars, which will be coming your way soon. As I said, we'll be tackling lots of really interesting issues there, so keep an eye out and make sure you sign up when those are live. I'd also love to hear your thoughts on any issues or concerns that you may have. What financial complexities are worrying for you? What do you want to know as a healthcare specialist? Feel free to email me and let me know your thoughts, and we'll make sure if we can get your topic on our next podcast. Thanks for joining me for this episode of Beyond the Balance Sheet. I'm Katie Collin, and I'll see you next time.